Hi, my name's Trevor Crowley. I'm with Long & Foster Christie's International Real Estate. Today we're here to talk about real estate news and the things that are going on in our economy, both domestically and perhaps abroad. Some of those things have an implication on what's happening in our real estate market here and at home. So today I have with me a special guest. His name is Sam Brownell. Sam has a BA in economics from Loyola, Maryland, and an MBA from the University of Maryland Smith School of Business. Sam also has the following designations of CVA and CFA. Sam's going to tell us what that's all about in just a minute. Sam worked in trading, valuation, and research at two investment banks, where he became a CFA charter holder and was an economic consultant analyzing structured financial products and other fixed income securities. In July of 2013, Sam started his own firm, Stratus Wealth Advisors, to focus on helping individuals, families, and business owners. So without further ado, please help me welcome Sam Brownell to the show today. Sam, how are you?
Good, Trevor. Good. Thanks for having me. Good,
Thank you for
good
being
to be
here.
Yeah, absolutely. Yeah. Well, I guess we'll jump in and I'll explain those two designations, right? So,
tell us first of all, what is a CVA designation?
Yeah. So a CVA is a valuation designation, and it's a certified valuation analyst, and it's through the National Association of Certified Valuators and Analysts. And really what it is it's for folks that do valuations of private companies. So any privately held business, this is the designation that helps you understand how to make those valuations.
That's okay. So I spent 20 years, for those who don't know, in the finance industry, and the CFA designation is the top of what you could probably hope to achieve in the industry. The CVA designation sounds particularly poignant as it relates to where we are today, in particular because the stock market seems like it potentially could be topping out, maybe not. And the same thing might apply to the real estate market. So valuation is of critical importance today, and I'm glad we have Sam here to discuss that sort of thing for us. Just for people who might not know, can you tell us what the CFA designation is too?
Yeah, sure. So CFA is Chartered Financial Analyst, and it really is the sister, so to speak, of the CVA for public markets. Okay. So when you're looking at your Apples or your Googles, people that have CFAs are doing valuations on these types of companies, and lots of times they're also running portfolios.
Okay, great. So I think you recently told me that you were on a panel and you were discussing supply chain issues potentially that involved subjects like lumber. I'm sure there were other subjects as well, or topics rather. But can you tell us a little bit about the panel and what you guys discussed there?
Yeah, sure. So a little bit of background. Specifically, my firm works with a lot of independent business owners, and we do them in specific sectors that we know very well. And one of them is the lumber and building materials industry. Okay. And so Stratus is an associate member, and we're on the Manufacturing and Services Committee of the National Association of Lumber Dealers around the country. It's actually the National Lumber and Building Material Dealers Association, so it's quite a mouthful. But they had their spring conference a couple weeks ago in May, and there's been a lot of M&A activity in that industry because it's done incredibly well throughout the COVID pandemic. It was deemed an essential industry. Right. Interest rates are really low, and there's a lot of private equity money sloshing around out there without a really good place to go. Right. And so all these factors are kind of converging on this particular industry. And so that was one of the things we were talking about was what is the impact of the recent boom in the M&A market on independent business owners who own their own lumber yards.
And can you tell us what the key findings were? What has been the impact?
Sure. So what a lot of folks get scared of when consolidation happens is I'm going to be out of business, right? Because I just can't compete with a huge chain that's got the backing from Bain Capital.
Amazon.
Right. Amazon is a great example. And for those of you who know anything about the private equity industry, Bain Capital is a huge player there. And they recently put some money into a company called USLBM that's been doing a lot of roll-ups. So they've been going out and looking for these smaller independent yards and bringing them under their umbrella. Okay. And so what the concern is of independent dealers are twofold. A, should I sell my business now because the market seems hot? Right. It's time to get a good price. And B, if I don't sell, how do I compete?
Right. Well, look, this ties into the real estate market in a couple of different ways. Number one, anybody who's a builder out there knows that, first of all, labor is really tight, especially in some of these labor-intensive type of job markets, right, where you're dealing with manual labor. You also have supply and material costs, which have gone through the roof, and we're going to get to why some of that is right now. But that's impacting the real estate market because the builders have to pass on some of that cost or absorb them, or they go out of business. And we saw a little bit of something like that taking place in 2008, and there was no true recovery. And that's why we have an inventory shortage today, is because the builder supply just disappeared. So can you tell us what you think? Because what I see happening is copper, for example, lumber, the various core materials that are associated with not only real estate, but a variety of different industries are going through the roof. And a lot of that is because supply chain constraint. And so there is that inflation. Demand continues to rise as now COVID is kind of, the cloud is starting to lift. And, that's going to feed into the potential concern as it relates to maybe something like the Fed increasing interest rates to try and contain inflation. So can you tell us what you think about the interest rate environment? Because that specifically relates to people that are interested in real estate, because the mortgage rates are tied to that.
Yeah, absolutely. Absolutely. And it's a great question. And as I mentioned earlier, a lot of this M&A boom is driven by the same thing, which is low interest rates. And
right.
We've been living in that low interest rate environment for over a decade at this point.
Mm-hmm.
And at some point, rates are going to have to go up.
Right.
They've been artificially kept low for so long. I mean, just think about the bond buying programs that have been out there,
mm-hmm.
right? After the 2008 crisis, but even expanded
right.
in the coronavirus. At the beginning of the COVID pandemic, the Fed started buying corporate bonds, which is really unusual. Normally it's government and some mortgage-backed bonds, which help, right, drive the rates down on things like mortgages.
Yeah.
You and me. But really now they've got their hands all over the market, and at some point that's going to have to be unwound.
Right.
And so while we don't know exactly when they're going to go up, at some point rates are going to go up.
Yeah. And
I think that is just another factor that's fueling this intense focus in real estate.
Sure.
Get in now. Right?
Yeah.
Get in while the getting's good.
Yeah. It's a tough scenario because you have low interest rates, which are potentially prompting some smart people to take advantage. But at the same time, you've got prices just jumping off the charts, and that's quashing any kind of value add that the low interest rate environment might bring. So it's difficult. So I wanted to ask you, do you have an opinion, since we're on the subject of real estate markets? I do want to say, look, real estate markets are totally local. If we say anything here, if you hear me say anything, it's specifically relating to our market here in the Washington, D.C. area, in particular, Maryland. But Sam, what do you think? I mean, do you have an opinion?
Yeah, well, I want to go back to a point you made earlier about the rising commodity prices out there, because that becomes really, really important. The National Association of Home Builders just came out with a study that said that lumber alone is responsible for $40,000 extra in the price of new home construction.
Whew.
And so, I mean, that's huge, right? If you're living in a market, in DC maybe not so much, right? Because prices are fairly high here anyways. But if you're living in lots of other markets, even like in the Midwest, right? In a metropolitan market, $40,000, that's a lot of increase in the price of a house. And you add to that the fact that, as you mentioned before, there's been a backlog in construction. We're not building enough homes.
Right.
And the demand has just been through the roof.
Yeah.
And I mean, people moving out of cities, people combining to buy houses and get into a new home. And so, for the time being, I think we're going to see this hot market continue because of the fact that we've got this confluence of events where there's a supply shortage, there's an increase in demand, interest rates are really low, and we've also got a building materials industry that has done phenomenally well.
Yeah.
And so they have a lot of cash to put back in to try to build more houses.
Right.
And then you think of another factor, kind of more upstream, which is when the coronavirus pandemic hit, lumber mills reacted as you would think. Well, it's going to be a recession. Demand is going to go down. We're going to reduce production. We're going to shut down some lines.
Yeah.
Well, that didn't happen.
Oh wow. Okay.
I read a stat the other day that the new decking starts. So putting a deck on your house was up 175% over the last year because people need spaces to entertain. And you've got a lumber shortage and people wanting to put on decks.
Yeah.
And so at some point, the prices are going to go through the roof.
Sure.
And it's just been really interesting the way that even with these rising prices, it's almost fed us a reinforcing loop of, I've got to get in now because the price is going to go up even further. And then more people get in and they push the prices up further. And then other people come off the sidelines. You see it happen in the stock market too.
100%. It makes me, when you're saying this to me, it makes me think of exactly that. In fact, I had a friend of mine send me a link this morning. He's in New York City. He sends me a link, and the link says, a Chevy Chase home was listed at about 3.5, and it went for 4.5. And in that price point, look, the 30% increase that took place, 29% increase that took place over list is not out of the ordinary in today's market. But at that price point, it's out of the ordinary. And so, you see all of this competition feeding into this frenzy. And when people see these, and I said to the guy, you see a lot of taglines, you see a lot of news, you see a lot of commentary, you see a lot of attention being supplied to a specific area, like, for example, real estate. In the finance industry, when that was happening in the stock market, that means watch out below. I do not think that's happening, meaning I don't think that's potentially going to happen in the real estate market. I do see some constructive deflation taking place over time at some point. Whenever that happens, I don't know, but nothing like you watch out below scenario. But it's interesting because that's usually what you do see in the stock market.
Yeah. It's a very good point. Very good point.
Yeah. So can you just tell us, is there anything, for example, that you might say, hey, I see a bunch of constructive things, or maybe not, on the horizon for the economy? I mean, can clients kind of feel positive about where we are today and the trajectory of where we might be next year?
Yeah, it's a really good question, and kind of it's interesting, at least from a theoretical academic perspective, to look at what has gone on the past year, because it's so unusual, right? Instead of having a complete dry up of aggregate demand, it just shifted.
Yeah.
Right? Folks didn't go to restaurants; they just shifted that spending to grocery stores.
Right.
And so it's going to be really interesting because we're going to start up in fits and starts, and I think that. You had mentioned earlier, tight labor market. There are a lot of folks sitting on the sidelines right now because they have kids who are in virtual school and because they're getting generous benefits from the government, which is great. But at some point, the jobs that they left, are they still there? A lot of businesses have closed. And a lot of the people on the sidelines now are folks in lower skilled positions.
Right.
And so, are the jobs at the local restaurant going to be there, at the local retail store? These are big issues, and certainly for the folks that I work with, when it comes to independent business owners, is can you get restarted, and how do you get restarted? Really is the question. And so, I see kind of a dichotomy here in the economy where you're going to have certain sectors that are just continue to surge ahead.
Okay.
Anything that is related to housing.
Yeah.
Is going to continue to do very well. And we're talking any type of building materials, any type of hardware, and any landscapes and hardscapes. These types of things are going to be very, very popular and going to be great to get into. Other industries, they might struggle, and we're going to see how many people want to go back and eat in a restaurant or go out to a bar.
Yeah.
And so I think we're going to see two different tracks here as we get back to normal. And I think the last part of it is psychologically.
Sure.
How quickly do people bounce back from I can't be near you to all of a sudden I'm vaccinated and I can, but can I flip that switch, and how quickly can I do that? Because there is a lot of money that can go into the economy right now.
Yeah.
And it's not just unemployment benefits, it's the stimulus checks that folks have been getting. This is good stuff for the economy. The question is, how does it get deployed? And where does it get deployed? And does it make those resources that are scarce right now even tougher to get to?
Yeah, right. That's a great point. Speaking of which, I have landscapers at my house doing a ton of work. I can't wait to get that bill. Mr. McPeak, you better be nice to me. So tell me one thing. I mean, you work with a lot of people, independent people, families, independent companies, small, medium size.
Yep.
Yeah. So do you have a website?
Yes.
What's the website? Tell anybody who wants to get in touch with Sam Brownell how they would do that.
Yeah, sure. So you can find us online. It's stratuswealthadvisors.com, and come by, check out the website. We've got lots of good resources on there, blog posts. We've got a business planning kit for independent business owners. You're welcome to download it and join the email list, and we're happy to keep you up to date on our latest thinking.
Tell us one thing that Sam Brownell likes to do in his free time that nobody knows about.
In my free time, I am a huge history buff, and so I
did not know that.
Love to read history. In fact, I'm in the second of a 3-part trilogy on the naval war in the Pacific Ocean.
Oh, cool.
And each book is about 800 pages long, so
with
2 children, it's going to take me a while to get through it.
Yeah, well, I heard you are a fly fisherman too.
That is correct.
Yeah.
That is correct.
You're going to have to teach me sometime.
Yeah, exactly. We'll have to go. The Potomac is actually an excellent place to go.
Okay, well, maybe next time we'll be visiting you from the Potomac. Until then, thanks very much for joining us, and thanks, Sam. We appreciate it.
Absolutely, Trevor. It's been my pleasure.